Hello, everyone. Welcome back to Money Conversations with Magical. Today, I'd like us to speak about debt management. Debt management is the process of managing your debt effectively so that you pay what you owe and you achieve financial stability. So, it involves using the debt you get into effectively while creating a plan to pay what you owe. So there are two kinds of debts. There is the good debt and the bad debt. Good debt is any debt that has the capacity to increase your wealth and the potential of higher income. It's debts like the mortgages, debts like the student loans, debts like the business loans. But when it comes to business loan, it's of course business that you've well researched on and that you've already understood the return on investment, because you have to factor in what is the return on investment vis-a-vis the interest rates you're paying on those debts. The second kind of debt is the bad debt. This is debts that have no potential to help you increase your income nor to grow your wealth. Largely, these are consumable, the loans that you take for consumables, like loans for food, loans for holidays, loans for other entertainment purpose. So when you're taking on a debt, it's important to understand, is this a good debt or a bad debt? So debt management is not about being debt free. It's about understanding the debt that you take on and then using that debt to effectively achieve your goals while employing the right strategies to pay off the debts that you have. And when it comes to paying off the debts that you have, you can use two kinds of strategies. The first strategy is what we call the snowball method. Snowball method is when you start paying off small debts first. Sometimes you could be having a big debt, a debt of a higher magnitude, as well as one that is quite minimal. So you start with the smaller debt, because what happens is that when you pay off that debt, it gives you a sense of satisfaction, a sense of motivation. You feel motivated that you've achieved something, and so you want to be able to continue doing that. Actually, small debts are like children. You see, children cry a lot. Small debts are like that. They are the loudest. Have you ever been in a situation where you owe someone 1,000 shillings, 2,000 shillings, 10,000 shillings? It's very easy for this person to embarrass you, as opposed to having a loan of 500,000 or a million from the bank. So it's important to pay off those small debts because they are embarrassing. The second strategy you can use to pay off your debt is called the avalanche method. Avalanche is where you start with the big debt first. Assume you have a debt of 1 million, 5 million, 2 million, 500,000. So what you do is you start with those ones, because big debts are quite expensive. And so the longer you leave them there, the more they eat into your returns. So you start with the big debts, and hence you avoid the high interest rate. The other factor when we are talking about debt management that you have to really put into consideration is the issue of credit score. Your credit score highly plays a very big role in your ability to get loans or credit. Also, it plays a good credit score uh, helps you to get actually loans of lower interest, as well as better long-term loans. So credit score is one aspect that you must really ensure that you are on the right side, because all this information is shared across board. Whether you have a loan from the bank, you have a loan from the mobile apps, all this information is shared, and so it's used to determine if you will receive your next loan when you go to the bank or even to those mobile apps. I've seen people who borrow uh, loans from mobile apps and they throw away the SIM card and they don't pay. I think that's a very dangerous trend, because if you're looking at growing big in business, you will definitely need a facility. You have a big project, you will need a facility either with a bank to fund that project. And what the first thing the bank will do is they will look at your credit score. How often have you been paying your loans? Do you even pay? So all these things will be used to determine if you will get your next loan. And so I repeat, debt management is not about being debt free. It's about being able to get a balance between using the debt effectively to achieve your goals, as well as employing the right strategies to achieve your personal goals. So, ladies and gentlemen, I leave you with that for today. I really continue appreciating you for listening in into these videos, and I also look forward to you commenting on any topics you feel we need to discuss. Thank you and have a beautiful day.